Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go over to those Bitcoin for our charts. So we were not able to break and hold above this level of resistance up here. You can see we had a couple of forays, but yeah, we traded sideways for a while, weren't able to really establish any decent price action above it. So after such a pretty aggressive move to the upside, we are testing our first little bit of downside here. You'll probably notice I'm saying just a little bit. I mean, it's still not much really in the context of the move up, and all realistically we are doing at the moment is trading within this next range, albeit most of the trading being done at the top half or just wicking above. But yeah, we are in this next trading range. So if we are to hold this low where we pretty much just wicked down to recently, if we're to hold this low and trade sideways in here, then that's obviously really good price action. I know we are lower than we were at this point, price value, but if we are above this level of support and we hold this, then that is very good. We have obviously this level down below us. If we are to lose this level, where we can then come back down and test into, and still it not look too bad. Realistically, we want to hold in this range, but if we are to hold this support here, then things will still be good. In the long to medium term. Obviously the problems arise once we lose this 19,500, at which point, I mean, targeting new lows is certainly not unreasonable. So we are at a relative inflection point here. We kind of need to hold this to be very, very bullish, I would say. If not, we then have to hold this level. This is the line in the sand before things will start to look pretty bad. We want to look at some other markets. The S&P similarly trying to hold above an important level of resistance, not really able to, so now dropping down. In the shorter term, we've got a kind of a little bit of a range where we're at now, supporting price action. But obviously if we lose that, then we have built up a few new ranges. There's another level here. We'll actually draw this horizontal in here as well. If we do trade lower, we've got this level here to support price, and then ultimately this level of support here. But yeah, stocks stocks having a little bit of a pullback here also. DXY is not looking so bad. I think this is it's not looking so bad insofar as we didn't break through this resistance. We got rejected by it. However, people could be looking at this as a bull flag, and then we do take a leg up, we blast us through this resistance. Things all of a sudden don't start to look as good. The projected target of the bull flag will be into the next level of resistance, and we could look like we are changing around this downtrend. So there is quite a bit of risk to the sentiment of the market if we do break above this resistance, and especially if it then starts to meet its bull flag target. So I can see why the market is a bit apprehensive here. This does need to basically get back down to this, well, pretty much the midpoint of this range, and trade below it before I think confidence will start to resume. I think we are pattern wise and proximity wise. It is looking a little bit dangerous up here, and obviously we know if this does spike up and then we turn the overall trend of the DXY, it's going to start to make people think we are going to be looking at a longer pullback as this DXY then commences an uptrend, even if it is only on the medium term time frame, not a long term time frame. Obviously 10-year yield not really helping us much. Broke above this level of resistance, back tested it, and now bouncing back above. So this is looking bullish for the yield, which is not ideal. Bullish again, I would say, in the shorter term, because we do obviously have a low, a high, a lower low, and then until obviously we break above this, we are just looking at where we are going to print a lower high. So there is that to be aware of. Gold obviously not liking the move in the dollar. However, as long as it remains above this level, it's not too bad. This is my bull bear line for gold. Satoshi pairing did trade nicely up to the level of resistance, then got rejected. So now we need to play a game of can we hold here, move back up, take out the resistance and continue to the next level, or are we going to trade back down into this support? If we do, it's not looking good. You would have to, if you trade down to the support, you have to give it the opportunity that even if not straight away, over time you will basically take it out. The Bitcoin dominance similarly at a level of support, so could bounce from here. And then the Ethereum USD pairing has lost this area of support. So whilst it does obviously have low wicks, it does have it. There is a horizontal level we can clearly see is relatively important around here. Yeah, we could obviously lose this level, and the next level of support is a little bit lower, mid 14s. So there is a potential deeper pullback on the cards, but I do think I personally think it will all hinging on what happens with this bull flag and what happens with this resistance here. If we start to calm the market's fears of a rallying dollar index, then I think we should see a resumption in the rally that we're getting in generally in risk assets. So let's look at stochastics. Well, 4 hours pretty deep, as you can see there. 12 hour still pointing down, still in inverted commas bullishly resetting, but needs to come down before it can turn up to then give us a nice move to the upside. Daily also getting pretty deep here, losing its downward momentum. That is good to see. Buy daily though, I'm guessing these are not going to be looking too good. Buy daily turning down, plenty of room to run. 3-day turning down, plenty of room to run. 5-day turning down from this high level, then things don't look as bad. Weekly looking good. Bi-weekly is going to actually be looking amazing here. This is a really good read. This is what we want to see. However, there is a sort of a trend line here that we could get rejected from, and then monthly also turn up from a low level, which is relatively good. So a little bit of a mixed-ish messages, because the shorter time frames looking like it's going to run out of steam, the stochastics, to the downside. Medium time frame look like they're only just getting going to the downside, and higher time frames looking good. So I mean, realistically, that is gonna probably result in just a sideways volatile chop with quite a wide range, which is not the worst thing, is it? That is not the worst thing to happen in a market for trading. So that is it, guys. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.